It's really going to be geared to first-time home buyers. However, if anyone's joining us that is an experienced buyer, we're hoping you're going to also find value because we are in a market that is different from anything else we've seen. So we've got a lot of speakers here today that are going to give us some insight into what they're seeing. My name is Denise Johnson. I am owner and broker of Torelli Properties Group at Compass. And we are I want to tell you just a little bit about Compass and Torelli Properties and then introduce our speakers for today, and then we'll get started. If anyone joining us hasn't heard of Compass, we are part of the #1, it's the largest independently owned brokerage in the nation with over 15,000 agents nationwide in 130 cities with 300 offices, 6 of them being in the Metroplex. Torelli Properties Group is out of the South Lake office. And just so you know a little bit about us, we had over 30 million in sales volume last year and sold over 75 homes. This year to date, we have sales volume in the first quarter at 20 million. So it's a very busy market, and we've sold 35 homes this first quarter, another 15 under contract right now. So I say that to say we are successfully getting buyers under contract, and we want to encourage everyone who is out there shopping for a home that it is possible to get a home. Our Compass's mission is to help everyone find their place in the world, and Torelli Properties Group is to find a place and love where you are. So here's our team. Again, my name is Denise Johnson. I've been an agent for over 15 years. Received my broker license in 2019. We moved over to Compass in 2019. And with me, I have a team of another 5 wonderful agents who help me cover the Metroplex. Katie Durham is a sales partner with us. Lacey Milani, Shelly Bunch, Justin Miller, and Jessica Harrison. We have agents positioned throughout the Metroplex, so we cover not just one market, but all the markets here. So we have an insight that other agencies don't have because we are working in all markets. Okay. And our speakers today, we're very lucky to have some people who we partner with. Joe New with Cherry Creek Mortgage is going to talk to us about financing, interest rates, and pre-qualification. How much savings does a buyer need to buy a house, how to win a financing offer, and other questions we have specifically geared to him. Eddie Johansson, the credit expert, he's the president of Credit Security Group. He's here with us today to answer any and all questions, well, maybe not all of them, but a lot of them on your credit. What should your credit score be to buy a house? What can you do to repair it? And so he's going to answer everything relating to your credit. Charles Dowlern is the account executive with Goosehead Insurance. He's joining us today on why you need to have home insurance on your house, what type of coverage you should purchase for your home, and what home insurance covers and doesn't cover. Also, we've got Chris Amador. He is the owner of CK8 Home Inspections and one of our top inspectors that we work with on a daily basis. He's going to answer questions on how important are home inspections before closing, what does a general home inspection cover, and what are major issues a new home buyers should be aware of. Okay, before we start with our Q&A with our speakers, I did want to bring up some slides that show some activity in Texas and in our local markets so people do understand the housing market that we're currently in. First quarter of 2020 compared to the first quarter of 2021, median home prices are up 14%. This is across the state. Active listings are down 53%. And closed sales are up 10%. We are seeing homes that are around 14 days on average, less on market. So we're seeing days on market of 47. This is across the state of Texas. And our local market, we have some statistics to show you from Dallas County and Tarrant County. This is from our local board of realtors. From April 2021 compared to April 2020, in Dallas County, median home prices are up 24%. Active listings are down 47.1%, and we're seeing 1.3 months of inventory compared to 2.7 a year ago. Average days on market right now are 30, which is 16 days less than we saw last year. Tarrant County, our median home prices are up 13.7%. Active listings are down 55%. And we're seeing 0.9 months of inventory compared to 2.1 from last year this time. Our average days on market are 22. And for those of you guys who don't know, a balanced market is typically around 6.5 months of inventory. So you can see we're far from that right now. Okay. And people are out there who are shopping for a home. We're seeing a lot of our millennials entering the home market, the housing market, who've been renting, professionals that are moving in and around the state and in the Metroplex. But we're also seeing a lot of relocation buyers coming from other states, primarily California. We're working with a lot of buyers from California right now. We've closed out quite a few. From Florida, we're seeing people come in from Chicago, from Pittsburgh, and from New York. So our local buyers are also competing with buyers coming in from out of state. And a lot of time those buyers are coming here with cash. So in 2019, we were ranked second in the United States for relocation activity. And we're probably still the same, if not the first. Okay, Monica, is that my last slide there? Okay, all right, let's get started with our questions for our speakers today. So I'm going to start with Joe New. Joe, hi, thank you for joining us.
Hey, it's great to be here. It's nice to see you again. Can you hear me?
Okay, yes, I can hear you now.
Okay.
You kind of cut out. Okay, can you introduce yourself and Cherry Creek Mortgage?
I can. I'm Joe New. I'm with Cherry Creek Mortgage. Been in the business for, I don't know, 18 years. And Cherry Creek is a mortgage bank out of Denver, Colorado. They've been in business for 32 years. We're about an $8.5 or $9 billion company. And when I say that, you measure mortgage banks by the origination they do in a yearly basis. And so we're about 8.5 to 9 billion a year. So it's kind of a small, it's not small in any means, but it's a medium-sized mortgage bank. And so we've been here a couple of years. We love it.
Okay, well, you're amazing. You're fantastic. Worked with Joe for many years. Joe, let's start with some basics. What does the word pre-qualified mean for a buyer? And what are the steps to get pre-qualified? And when should a buyer get pre-qualified?
So let me start backwards. I believe that it's really interesting because when you think about somebody finding a home, right, or the idea of I want to buy or I want to sell, right, they fall in love with the idea of something new and something different, and maybe their first home where it's something different than an apartment, right, or the house they rented, and they fall in love with that idea. They typically don't fall in love with, let me go take a look at my credit, right, and let me kind of get undressed, if you will, when it comes financially, and that's scary to most people. So I would tell you that if you want, especially in this market, if you want to lean into things and really get the cart, not get the cart before the horse, is you go through a pre-approval process. It's a simple process. You contact somebody like me, you have a conversation about your short and long-term financial goals. We kind of go through a litany of questions to make sure that we don't have any I gotchas up front. And then we lead you into a loan application that literally takes, I don't know, 15 minutes online or in person. And then, we take a look at credit, and if we don't have any issues there, then we kind of move forward. And the pre-approval process itself is probably a 30-minute process. The pre-approval, I want to talk about that because there's a difference. I know you're going to ask me about pre-qualified versus pre-approved, and then we'll talk about some other situations. But when you get pre-qualified, we've had a chance to take a look at your credit. We have income documents, we have asset documents. We put that all in our little system, and we run that through the Fannie Mae or Freddie Mac's engine, and it gives us what we call an automated approval, right? And it says this loan's approved based on all these conditions, income, assets, those kinds of things, title work. And so we issue a pre-approval then, and then you take a client and you go shopping, and we know exactly or very close to what their maximum amount is they can qualify for, what hurdles these clients have that we may need to navigate around depending on down payment or the amount of money they have for closing costs and those types of things. And so you go through your process at that point in time, and then we re-engage that client when you get ready to start to make an offer.
Okay.
Does that answer the question?
Yes, you did. Okay, let's talk about credit score and I'm going to talk to Eddie about this as well, but what minimum credit score does a buyer have to purchase a home right now? And how does credit affect a buyer?
So each mortgage bank is built differently, right? We all have different risk tolerances, but I think across the board today, I think you're going to see that FHA and VA are going to be 620. Many people are still at 640. And then they'll get exceptions for something below 640. And typically when you have an exception, there's got to be some redeeming factors, whether somebody's sitting on more cash or has great employment length or those types of situations. There's got to be some type of factor that will allow somebody to make an exception down to 620, but currently 620.
Okay. How much money, Joe, does a buyer need to have saved to buy a house?
I answer this question a lot. The truth is, if you make in Dallas County, Tarrant County today, if you make less, I believe it just changed, it's less than $115,000 as a combined income, you really don't need any, right? I mean, there's bond programs out there that give you 3, 4, and 5% bonds. Most of those are forgivable or forgivable second liens that you can use, where that money is given to you for the use of either down payment and or closing costs. Typically people say, well, I need to have 20% down. And that's simply not true today, right? If you're a first time home buyer, the minimum is 3% down, and you can get that in the form of a bond. If you're not a first time home buyer on a conventional loan, it's a minimum of 5%. And then if you're FHA, it's 3.5% is the minimum down payment. And then if you're a VA buyer, you because you served our country, and it's really nice because it's 100% financing. There's also 103% financing for USDA, but you don't see that a lot inside the Metroplex. That's typically something that outlies in a rural property.
Okay. Joe, what type of documents does a buyer need to have to get pre-approved for a loan? And how long does it take to get fully approved?
So if you're a W-2 employee, 30 days worth of pay stubs, 2 years worth of W-2s, we don't even need your tax returns. We'd love to know what your assets look like. So 2 months worth of bank statements. That gets you 90% there if you're a W-2 employee. If you're self-employed, it's a little more in depth than that, right? I'm going to take a look at your personal 2 years worth of personal tax returns. I'm going to look at 2 years worth of corporate tax returns, depending on how you're set up, and that takes a little longer. But by and large, it's not a lot of documentation today.
Okay. Well, that's great to know. And what should a buyer not do when they are under contract on the purchase of a home?
I want you to eat and I want you to breathe. Okay. And after that, I don't want you to do anything else. I'm just teasing. So that's a really great question, because don't go out shopping for furniture, right? Don't have somebody re-pull your credit. Don't open up any new accounts. Honestly, don't pay a whole lot of stuff off unless we've asked you to, right? I'd like for you to keep your financial situation we just make your payments on time. Eddie's going to tell you, make your payments on time, and he's right? If you owe money, make them on time, but don't add any new credit. Don't go out and buy a new car. It's funny. Can you wait to take your vacation until after we close the loan? I mean, we have a lot of that where somebody's had a closing date on the 30th of the month. They go, I got to move this 15 days ahead because I'm not going to be here because we planned a vacation, right? I mean, those things create stress in people's lives. And so when we ask you not to do something, it's because we're trying to keep things calm and make it as stress-free as possible for you. Because once you go out and you increase your credit debt, or you make changes in your employment, for example, it creates more stress on you. We don't mind doing the work, but we're just going to have to go through and document all those changes that you've made.
Okay. I'm going to come back and ask you some other questions in a minute, but the last question I'm going to ask you right now is, what are interest rates currently, and where do you see them going for the rest of the year?
It's a really good question. In fact, I was just reading some information today on some people that I follow. Interest rates today are in record low. They're not as low as they were this time last year, but they're in really good shape. I locked loans here's the deal. Interest rates, first off, you need to know this. We need 28 pieces of information to really know what your interest rate is going to be, right? People call me all the time and go, hey, what's your rates and fees? And I go, tell me what your credit score is. Tell me what your debt to income ratio is. Tell me how you're going to structure your loan from your loan to value perspective. Let me say across the board, when you go and look at rates online, those rates are going to be you putting 20% down. Okay. That doesn't fit everybody. And so I will tell you that we're locking rates today from 3.8 to with a 740 credit score above. We're locking rates. We locked rates yesterday at 3.8. The loan to value on that was like 42%, to 3 3/8, 3.5 in some situations, depending on what product you're looking at.
Do you see it going up?
As inflation heats up, and I was just reading the Fed notes, as inflation heats up, they are going to start minimizing the amount of mortgage-backed securities that the government buys and purchases from Fannie and Freddie. And so as that happens, you're going to start to see rates creep up. The people that I follow say, hey, we're going to see somewhere in the high 3s between now and the end of the year. Okay. But nobody has a crystal ball, right?
That's right. Okay, Joe, I'm going to come back and ask you some questions at the end, but let me move over to Eddie Johansson. He's our credit expert. Hi, Eddie.
Hey, how are you? Thank you for having me.
Thanks for joining today. Okay, please tell us a little bit about yourself and your business.
My name is Eddie Johansson. I'm the president of Credit Security Group. 2001, my wife and I went to buy a home. I was raised in East Texas. I like to say I was raised in the woods, Nacogdoches. And growing up, although my mom co-signed me on the vehicle, I didn't know what FICO scores were. My wife and I had 2 good jobs, no debt, money in the bank. And I thought going and buying a home was like going and buying anything else. And being denied over this FICO thing was very different. I can still to this day see the doorknob on our apartment as we came back home from that denial meeting. And it's a very different feeling. I thought I was choosing to live there. Then I realized I had to be there. And so I've been self-employed all but 3 years of my life. So figuring things out I've been pretty good at doing. And so I dove into books and literature and downloads. And I just went down every single rabbit hole to figure out this FICO score thing. 6 months later, I thought we were done. We got actually a contract to purchase a house. The lender repulled our credit. We weren't even halfway there. FICO was really the first thing in my life that kicked my butt. And I realized that so much of what I was learning by quote unquote experts really wasn't. It was people saying things that was logical to them, but not necessarily true. So I fell in love with the mystery. I figured if I saw more and more reports, I could figure it out. I quickly realized that every credit report was a perfect calculation of that score, and you could understand it. It was a strobe light into a real complex animal. I went to work for a credit repair company. I didn't like that. Went to work for this other guy who promised something different. Didn't like that either. And so in 2004, I called my dad. Dad's brilliant, self-employed his whole life. My Uncle John's a software engineer. My mom had been working with me in the business as an analyst. And so we started Credit Security Group in the summer of 2004. Our only mission is to get borrowers back to their lenders to close on a loan. Everything we do is surrounded by that one thing. Getting close doesn't count. Having a score goal that a loan doesn't close doesn't count. Loans close or they don't close. And there's really nothing in between. So I've been meeting with consumers, a thing we call the credit security analysis.
Okay.
We go through the goals and timeframes, and I'm within a couple of weeks of my 11,000th paid consultation.
Wow. Okay, Eddie, you said when we talked that you mentioned you were not a credit repair company. That was confusing to me. Can you explain that?
I can. So credit repair is really simple. They'll offer a free consultation, much like any salesman would, and they will sell you their magical dispute machine thing. They'll tell you things that are not true, like don't pay that debt. It's going to update this activity date and it's going to lower your scores. Go open up a whole bunch of new accounts, pay your credit cards down to 30%, and we're going to charge you monthly fees. And then one day everything will be gone. Over time, the consumer realizes that this is just not working. And it's even gotten worse. The reporting agencies are just simply robo verifying things, even correcting it truly inaccurate information is really difficult. About 10 years ago, I started testifying in federal court and state court as an expert witness. And so through that, I've been able to see so much that's behind the scenes. And so what we do is different. The right way to increase somebody's scores is to inject money into the right places. And it's not where common sense would tell you. I met with somebody just earlier this week. There was a $55 collection that needed to come off. They had thousands of dollars in other debts. I coached them on how to get that one account off. They're going to pay down their credit card. In 3 or 4 weeks, they're buying a house. So people get confused as to what's most important. What do I have to do? I can tell you this, though, if anybody talks about disputing and we're going to do this for you, they're simply writing letters that are lies. And if you ever read what these companies send out, you'd be embarrassed that they're actually signing your name to it.
Okay. Wow. Well, I did not know that. Eddie, there are so many credit scores out there. Which ones matter for mortgage lending and how can consumers get those?
Good question. So this is an often thing, Joe. You see it every single day. My online score is X. You pulled Y. Consumers get upset because that's supposed to be quote unquote their credit score. At the end of the day, we are using three very specific FICO models. FICO stands for Fair Isaac Corporation. They are the company that makes these scores. These are the scores that Fannie and Freddie accept. And we're using FICO score 4 for TransUnion, FICO score 5 for Equifax, and FICO 2 score 2 for Experian. The only place a consumer can go today to get these three specific scores is myfico.com. It's not an inquiry. Anytime we go get our data, it's never an inquiry. What so many people have is Credit Karma. That is not a FICO score. It's called the Vantage score. You can't find any correlation to it. You can't say it's often this high or often this low. It is completely different. FICO and that score, dogs and cats have more in common than those two scores.
Okay. Well, now that you've mentioned that FICO scores are the ones that matter, how does a negative event on a report get scored or affect FICO scores?
So Fair Isaac and Company in 2004 announced to the world the purpose of the scores. And what they said was that these FICO scores are trying to predict the likelihood of a 90-day default in the next 24 months. So think about that. People are getting loans over 15, 30 years, or even a car loan over 5 or 6 years. And the score they're using is simply predicting future performance. And you really can't predict beyond 24 months. So what's logically used is recent performance. I can't look at how the Cowboys are going to do this next season and play into that the fact that they won the Super Bowl 3 times in the 90s, right? I'm going to look at the last 2 seasons. I'm going to look at recent behavior. We do that with coworkers. We do that with our kids. Recency is everything. So when it comes to something negative, the more recent it is, the more recent it may be scored. And that's what we're really good at seeing. Some things are really old, but they're being made to seem like they just happened. But inevitably, a 30-day late, if you have no 30-day lates in the past several years and you accidentally get one, and let's say you're a 700 credit score, you're losing 40 to 50 points. They're gone. And you'll get half of those back slowly but surely over the next 2 years. So that 30-day late is more score influencing than an event that's 2 or 3 or 4 years old. So it's all about recency. Another key point about something negative: dollar amounts do not matter. So the $18,000 negative that you have and the $18 negative you have, that difference doesn't matter. Furthermore, dollar amounts don't matter when you buy a home. $1 million mortgage is not more powerful than an $80,000 mortgage. A $10,000 limit on a credit card with a zero balance is no different than a $300 limit with a zero balance. There's no wealth, money, income, any of that stuff in this FICO scores. So the FICO scores had to be created to where it's all comparative within the event, within the file, how an event is scored as a whole, how it fits into it. Similar to, another dent on a farm truck that has 50 or the same dent on a brand new car that has none.
Okay. Eddie, when you and I spoke, you said that every time you hear building credit, it makes you cringe. Why is that?
Okay. So when we were all 18 and our credit report was blank, we started to build credit with our first accounts. As we're older and we get to the point of buying homes, 20s, 30s, 40s, 50s, we have built something. What I see so often and what makes me cringe is that lenders or online or credit repair people say, go open up new accounts, go open up 3 or 4 revolving accounts, go open up these consumer finance companies, go build credit. Well, since the FICO score is predicting the likelihood of future default, a new account meant you didn't have any money. You were broke. So how does raising your hand 4 times saying you're broke over the past 5 months make you less risky? Now, there are some different situations where, let's say a consumer doesn't have a credit card at all. Well, then yes, get one bank revolving account and stop. I see credit unions offer these secured installment loans, these credit builders. Well, they had 9 student loans, an auto loan. What do you think that 11th installment loan is going to do? It's just going to lower scores. So the simple thing to remember is that FICO rewards those who don't need credit because it means you have money to pay your bills on time. We have to have a little bit of credit going. But this whole thought of all these accounts and you're married, do everything joint, we're building credit, the exact opposite is happening. It's lowering people's scores.
Okay. Eddie, I'm going to come back to you also. I'm just going to get some questions with Charles and Chris, and then we're going to come back around. Charles?
Hey, how you doing?
Hey, this is Charles Dowlern with Goosehead. Do you want to tell us a little bit about yourself and your company?
Yeah, absolutely. Thanks first and foremost for having me. I really appreciate it. What an honor. So a little bit about me, guys. I'm here in the DFW area, specifically Westlake. Goosehead Insurance, our headquarters is located here. We're the fastest and largest growing brokerage here in the state of Texas. That being said, to put it into perspective, I like to call it like the Netflix of Blockbuster, right? We have product for every situation. Right now, I think we're growing right under 40. Anyway, we'll say 35 to 40 different carriers right now we have access to provide at our fingertips for you guys. But more specifically, yeah, just jumping in. The reason, if you haven't heard about us, we don't spend our billions on, the Geico, Gecko, or anything like that. Love him. But we actually put that back into our product to save money in your pockets.
Okay, well, thanks for joining us, Charles. Let's start with a basic question. What is home insurance and is it required?
Okay, we'll go ahead and touch on the latter of that one. Is it required by law? Technically, no. If you ask your lender, absolutely yes. If you can pay straight cash and you want to assume the risk of anything happening, hey, so be it. I do not advise that. And if you ask Joe, he will say, hey, you better not assume all that risk. Let's push that to an insurance company and let them assume it for you. And to talk about the first half of that, what really is it? Like I said, it's a transfer of that risk. It's a form of property insurance, but it's going to cover the losses and damages not only to the house, the structure of like the roof, the brick and mortar, but also to your personal property as well. And also is going to extend some liability insurance too on the property.
Okay. Charles, what's covered on a typical home insurance policy?
Yeah, absolutely. So there's 4 areas we could kind of generally break it into. We could get pretty hairy. But just to kind of give a general idea, let's talk about the outside, right? Outside damages. You have hail, there's weather, right? So you have the roof, the structure itself. If you take a look on the inside, the walls, the furnishings. What else is on the inside, right? Your personal property, whether it's stolen, whether it's damaged. And then let's say you have people over at the house, someone gets hurt and wants to sue you. You have liability coverages as well.
Happen.
Oh, are we frozen?
Come on.
My back.
Okay, sorry. My internet was hung up there. Okay. If I pause, that's why. I'll be right back with you. But okay, what are the key things to look for in a home insurance policy, Charles?
Yeah, absolutely. So guys, water coverages. And when you're talking with your agent, please go over these. Do not cut them. I will say 70% of claims in Texas are actually water related, whether that's a 3-month leak in your attic, it just hit your ceiling fan while you're watching sports at night and you're like, where'd that come from? Pipes busting underneath your foundation. That's an expensive slab to rebuild, guys, as well as water backup. You want your toilets going one direction, not the other way around, I promise you. So you're going to want to take those into consideration. Another one that's going to be huge, look at the age of your roof. That's going to be a huge factor in determining your premium, right? Most roofs in Texas are about 10 years old. Anything over that, you might want to take a second eye, have it checked out by your inspector. Okay, guys? And then lastly, your deductibles. If you have to file a claim that is a payout of your pocket, usually you're going to be looking at 1%. So 1% of whatever you're insuring your home up to is going to have to come out of pocket in case of a claim. Usually you're going to be looking at 1% or 2%, and that's going to be a subject call on your end. But those are the main takeaways and main things I would keep an eye on.
Okay, Charles, what is important for a buyer to know about choosing a home insurance company?
Really what it comes down to, specifically from Goosehead, is find an agent you trust. I think take the carrier situation out of it if you're going to go for a brokerage standpoint and find somebody you can trust. Because like Goosehead, we're a platform to 40 different avenues for you, right? So at the end of the day, you need to understand and trust your agent that they're letting you know what you're signing up for. And that, you know, if you give them a call, they're going to pick up and be there for you. And then it's just not transactional. You're going to want to build a friend, and this is your biggest asset. So find somebody that's going to take care of you.
Charles, how much does home insurance typically cost?
That's a trick question. I'm going to say depends. There's so many different factors that go into it. You have location, specifically if there was a bunch of hail claims, let's say in Denton County versus in Houston, right? There's going to be a rating there. They look at your credit. It's a soft hit on your credit. It is not a hard. So Joe, please don't come after me. I promise. And then also on that, there's multiple different factors there. But like I said, mainly you're going to want to find somebody you can trust that has access to multiple carriers. And then you want to understand what you're going over.
Okay, great. Thank you, Charles. I'll be back around to you too. Let me just introduce Chris Amador also. Thank you, Chris, for joining us today. I think Chris is with us still. Chris, are you there? Hi.
Yes. Hey,
Hi, great.
Thank you for having me.
Thank you. Chris, you are a home inspector and your business is CKA Home Inspections, correct?
That is correct.
Okay, fantastic. Do you want to tell us a little bit about yourself and your company?
Sure. My name is Chris Amador. I'm the owner of CK Home Inspections. Me and my wife have 2 daughters, 23 and 27, both wonderful young ladies. We've lived in Southwest Fort Worth for 28 years now in the same house, and we're not selling anytime. Also, we started our company back in 2016 in November. We have 3 inspectors now. My wife does all the invoicing and scheduling, and we're also partnered with a termite inspection company as well for you guys, and it's doing them for $100. So that's a good deal for everybody. So like I said, we've opened 7 days a week. We're certified pools. Well, we do farm, commercial. We offer online scheduling, which is really important right now because the home inspection slots fill up really fast, even with 3 inspectors. And we do weekend inspections as well, so we're at 7 days.
Okay, great. Chris, for a first-time home buyer who doesn't know anything about purchasing a home, what is a general home inspection and why are they important?
You know, especially with the first-time buyers, we really like to have them there as much as they can get there. It really benefits them to be there at least at the end. The longer they can be there, the more they can understand about just the whole function system of their house, what to look for, kind of take the anxiety off of it, because by the time I've got to them, they've been in a whirlwind of just hurry, hurry, hurry. You know, it's time, and I can actually set them down and talk about the house and what they can expect over the long haul. Because like I said, like you said, most of the time they come in and they don't know very much. It's our responsibility to educate.
It is our responsibility to help home buyers know what they're getting into when they purchase a home. What exactly do you check when you're inspecting a house?
For us, just do a typical like crawl space house, a pier and beam home. So we're gonna do the foundation. So we're gonna put on a suit and go into there as much as we can and look around for any issues. Typically, that's where the issues are going to be in a pier and beam. It's going to be some kind of wood rot or plumbing leak or something like that. We do every system in the house. We try to date code for you, so your HVAC systems, your water heaters will all be date coded. Like I said, we'll start to talk to the clients about what they can expect out of their units. We walk as many routes as we can, so we can get a real good view of that. We have an inspector that does drone, but he walks when he can as well. We'll do drone when it's choosing. Other than that, all electrical, all plumbing, all walls. We go walk the attic as much as we can get into the attic. Check all flashing around everything inside the attic and outside the attic. Walls, windows, plugs, you name it. It's a process, and it usually takes at least 3 hours.
Okay. What other inspections other than a general home inspection should a buyer consider doing on a home they're purchasing?
Outside of a normal home inspection, if the house is typically built in the 70s or before, I'm usually going to call for an external plumber to run a camera down the main. Even if I can see the PVC in a crawl space that's been redone, I still can't see past the ground to the street. A lot of times, somebody touched on that. I think it was Charles, about the expense of having to dig up a cast iron pipe and replace it. Even if it's not inside the house, it's still a relatively expensive process. Termite, if it's on pier and beam, always have one of those as well. Other than that, you can do outside inspections like radar and thermal, but those are the ones that I would definitely do as a house built before 75-ish. Go ahead and have the drains filled.
Okay. And Chris, how much does an inspection typically cost a buyer?
We start off at 360 up to 2,500 square feet. Going on external pool and things like that would add a little bit to the inspection, but they start off at about 360, and that covers about 75% of the houses we do, or 25 or below as far as square footage.
Okay. And last question, I think some people who, when they purchase new construction, don't understand the importance of why a third-party inspection on a new build is important. Can you address that?
Yeah, and I would have them go to our Facebook page, because I'll always post some crazy stuff I find. A couple of new builds, I've hooked up my hose gauge to the outside hose bib, and the water shot out the weep hole, so that there's a broke pipe behind the wall somewhere. They're building really fast right now, and there's just different levels of build all the time. And right now, sometimes they need to be looked at all the time. And I'm encouraging phase inspections right now. If I can get a hold of them before they even pour the concrete, that's even better.
Okay. Okay, great. Okay, so I'm going to come back and ask a few questions, and some of our team may have some questions for you also, Chris. But
Okay.
Let me bring it back to Joe. Joe, I think a lot of people tuning in are wondering, what they can do to be effective in making a finance offer right now in our market. There's a lot of competition. And buyers are frustrated, and I want you to maybe touch on what a buyer can do to be successful in a finance offer. You want to talk about that?
Yeah, so I'd love to talk about that. So almost 20 years in the business, never seen a market like this ever, right? So let me give you an idea. First off, last year, 2021, the industry as a whole, the mortgage finance industry as a whole, typically is tapped out when they do about $2.3 trillion in originations. That's about as much as the industry can manage, right? So we just left an industry with a year in the industry where we did 3.3 trillion. Okay. And so most of that, or a $1 trillion of that, was refinance business. And you were talking about a market where purchase business is up 13%, in some markets 20%, in other markets. Not most of, but a large percentage of last year was refinance business. And everybody wants to know, why is it still busy when you can't find a house to buy, right? And there's more buyers than there are sellers today, correct? And so when you think about that, you're going to find a market that is extremely competitive, where number one, homes don't stay on the market very long. Number two, there's multiple offers on everything. A lot of the cash buyers are hitting the market, especially in the $150,000 to $300,000 range, right? Because they're buying investment properties. And so you think, oh my gosh, how do you manage this process? And how do I even get into the game to secure a place for me and my family to live? So if you're financing a home today, whether you're a move-up buyer or whether you're a first-time home buyer, I would tell you, used to, we went, you got to get pre-approved. And I would tell you that's not good enough today. If you're pre-approved today, you're not ready to buy a home, because the market's not ready for you. The market has passed that. I would tell you that I believe you have to be ready to go in and do battle with other offers, and everything being the same. There's got to be a way for us to level you up, so that we have all the pieces of the puzzle put together, and we take as much risk out of this for the seller. I know that sounds counterintuitive. We have to take as much risk out of this offer for the seller to get it accepted. So what I mean by that, we go ahead and we do a pre-approval, we get an application, we get your income and your assets, we run it through the system, and we say, yes, they're approved because automated underwriting told me so, and you go out and go shopping. And then everything being equal, the cash buyer may get the deal, right? Or invariably they go, this person's putting 30% down. There's less risk in this offer than there are in the other offers that they have. And that's simply not true. It could be that them putting 30% down is the only way we can get them financed, but nobody wants to think about that, right? So when you look at FHA, you look at VA offers, you look at conventional offers, and everything being equal, if we can completely underwrite your credit package, which takes a little more time, from the time I get an application, I kind of sell, I don't sell this. I want you to lean into, I need to help you and your agent make a better looking offer, because I want you to win. And to do that, I need to completely underwrite your loan. And the way we do that is we collect your documents. We create a file that is your maximum loan amount based on your short and long-term goals. We submit it to underwriting. It takes 5 to 7 days to do it, and they underwrite the file just like they would if you were submitting a complete offer. And we come back and we replace that pre-approval letter with a commitment letter that says, we're completely underwritten, subject to a contract, appraisal, title work, and a survey, and I can close you in 12 business days. And you, as an agent, are able to submit an offer on the third-party financing that says, that's checked, paragraph 2, box 2, that says, this contract's not subject to buyer approval. What that does for you is it takes away your ability to get out of the loan because of financing. It does that. It also takes away the risk from the seller wondering whether or not you're actually financeable, because there's no days in your third-party financing. It's not as good as cash, but it's really close, right? It's as close as we can get. And so I think submitting offers that way raises your offer and raises your game of play, allows you to serve as an agent, your clients at a higher level. So if you're asking me, what do you want me to do? I want you to lean into the process today.
That's right. And we have to have our buyers they have to be ready to go to battle. Like you said, they can't wait. The market isn't going to wait for them to do all this after the fact. So we encourage our clients to get with their lender partner and work through these things in advance. And another thing, when we're talking about credit, Eddie, a question we have here is, what can a buyer do to raise his or her credit, and how long does that take?
So I've known Eddie, how long we know each other? 13, 14 years?
Yeah.
Something like that. And so I was introduced to Eddie when I use credit repair. I don't use credit repair today. I use Eddie. And I really leave that to him to answer that, because let me give you a story. A bunch of years ago, I sent this file over to Eddie. I had permission, and I said, man, I don't want to take this contract. The lady was already under contract. And he said, let me talk to her. He had a conversation with her, in literally in an hour. He called me back and he said, take the contract. I can have her where she needs to be in 2.5 weeks or something like that. And I said, Eddie, I call BS. And he goes, no, dude, I can do it. And I go, no, I'm telling you, I don't want to risk my reputation on you being wrong. So 13 years later, as long as people have leaned into the process with Eddie, we've never missed anything. We closed the loan, and I told the other listing, I told the agent, I said, I don't know, this dude says he can do it. And we did it. So that's really a question for Eddie, depending on the situation, depending on what that borrower has out there, if it's a judgment or if it's just a late payment on a credit card, or it's a debt that needs to be paid off. That really is a question for Eddie. I don't want to say I don't have the answer, but he would be more intelligent about that than I would.
Well, Denise, I can help answer that. So once I meet with the borrower, we do what's called the credit security analysis. We have a fee for that. I meet with that borrower. I get all my questions asked. I get all the questions asked through the credit report. We've been keeping track of all the companies that report for 17 years in a database. Every single collection company and who they collect for means something. Capital One is different from Bank of America. We keep track of all these nuances so that when I look at a credit report and meet with that borrower, I know what's possible right then. I've seen credit reports where they couldn't get 5 points, and we've helped people get over 100 in a couple of weeks. It all comes down to that individual. All I can tell you is this: early on, when I started in this business, knowing I was going to be 100% referral based, we don't have a marketing department. We've never made a brochure. We don't do search engine optimization. I work with the Joes of the world, professionals who really know what they're doing. Joe gives me very clear marching orders. He's done his due diligence. He knows his world really well. I can trust the finish lines he gives me. And when I get him over the finish line, they close. So having Joe and I and Chris and Charles, and as a team, you have us in our back office. I mean, Joe and I don't do all this work ourselves. We have some really talented people behind us, but it's being a team together, getting clear orders. Joe's got this black box called DUNLP, the automated underwriting engines, and it is a black box, but because he's run thousands and thousands of files through it, he can feel it and better understand it. All right, Eddie, man, I really would like a 660 on this one, but I feel good about a 640 going through, or 660, 680, or whatever the scenario may be. And then I can gauge what I'm doing from there too. So it really depends on that data and that borrower's means. But at the end of the day, they're going to have the truth. They're going to be able to answer simple questions like, should I extend my lease? Should I go month to month? How can I live my life? We have to be right. We don't have the luxury of being wrong. I have to hit every single score goal every single day for everybody. And that's how we work every single day.
Okay, thank you, Eddie. You know what? We've got a few more minutes left of our webinar, so I want to open it up to any attendees if they have some questions of their own. I think we do have some questions. Grace, are you there?
Yeah, sorry, I was on mute. Can you hear me?
Hi. Yes, you have a question.
Yes. I've heard, and this may not be true, but I just wanted to, yeah, can you hear me?
We can hear you.
Oh.
Okay.
Okay.
I wanted to ask if checking your credit affects your score.
Good question. Anytime you or any consumer go get their data, if you go to Credit Karma, you go to My FICO, you go to the bureaus, you get your annuals. Anytime it's just you, your computer, and the reporting agencies, it's never an inquiry. Hard inquiries are an extension of credit: new car, new home, new credit card, things of that nature.
Okay, and I think we also have another question from an attendee. Natalie, are you there?
I'm here.
Hi, Natalie. What's your question?
Hi. So I'm saving up for a first home in about a year, and I'm just wondering if we had like a goal in mind before talking to anyone of around 30K. And I'm wondering if that's enough or if I need to think about more for closing costs, or what are your thoughts on that?
So I'm assuming you want me to answer that, and I'm more than glad to, Natalie. You know, everybody thinks, let me just tell the story. So Fannie Mae in 2010, Fannie Mae and Freddie Mac came out with what they call loan level pricing adjustment, risk-based pricing. And used to, people said, well, you're going to find your very best rates when you put 20% down. And that's simply not true today. The fact is, you'll get a better rate with MI on your loan than you will without MI on your loan until you reach 40% down. So the investor has 60% or less invested in the real estate. And the way they do that is because mortgage insurance mitigates the risk. So if I asked you, say, hey, Natalie, I want you to let me borrow $300,000 at 3% over 30 years, and I only want to put 3% down, you would look at me and go, I don't know. I don't want to do that, right? But if I said, hey, I'm going to buy an insurance policy that mitigates the risk in case I default, you go, well, that gives me some more security. So to answer your question, $30,000 is actually a pretty good number. I would think, depending upon what you were trying to purchase. So let me ask this question. How much house, when I say how much house, financially, how much house are you thinking about trying to get qualified for? And then I'll answer the rest of your question.
I would say around 2,000 square feet, 3-bedroom home in, I think, around Plano, Texas, if that helps.
So Denise, is that a $250,000 house?
Probably right now it's closer to 350 or
Oh.
350.
Yeah.
So you're 350, and the minimum down, by the way, right, is 3%, right? So if you're 350,000 at 3%, oh my goodness gracious, don't fail me now, times 3%, right? So you're $10,500. That'd be your minimum as a first-time home buyer. So you currently have the ability to do that now. And the question you have to weigh is, if I wait for the additional money, what does my buying power diminish to if rates go up? Because we know that the home appreciation rate continues to go up, right? Or is scheduled to go up. So you might, when I'm not trying to talk myself into a loan, whoever your lender is, whoever you want to trust, you might have that conversation today and compare that to what it would look like if you put $30,000 down a year from now.
Okay,
Denise,
Great. That answers my question too. Go ahead.
Natalie, I'd like to add something real quick. If you and your husband, go to myfico.com, look at FICO score 4, 5, and 2. You got to have a few clicks to get there. The mid score is what you're looking at. And so be sure you're good there as well. Everything else is just going to be misleading.
And we have time, I think, for one more question. Naomi, are you still there?
Yeah, I'm here.
Hi, Naomi. Thanks for joining us today. Do you want to ask one of the speakers a question?
Yeah, and I think this will go for inspections and maybe on your end for like on the broker real estate side. We've been told that that it's been, I guess, a practice to say that we will bypass the inspection on a home to make the offer look more appealing to the seller. But that makes me really nervous, especially the market that we're in. The houses tend to be older, so we don't want to do that. In fact, we even saw one that looked like it had a cracked foundation. So what is a way that we can still get the inspection, but give some security to the seller so that they don't feel like we're just going to back out for something silly?
Okay. Well, I'll start with that answer. And we are seeing this happen more in our market right now, where buyers are waiving their option period. And that doesn't mean you have to waive the right to an inspection. That just means you're waiving your right to terminate. Can y'all hear me okay? Because my internet has been acting a little funny today. So, okay. Yeah. So yes, Naomi, unfortunately that is happening more where, especially I think you're a first time home buyer, that can be very, very scary. I would never recommend a buyer moving forward with that unless they are 100% comfortable. It doesn't mean, like, we just put a buyer under contract who did waive their option period, but we still held inspections. So you still will know what you're getting into once you purchase that home, but you are waiving your right to terminate. Now that's your call as a buyer if you, in fact, you want to do that. In order to be competitive right now, that is something we are seeing, Naomi. So it's really up to the buyer and their comfort level.
Okay, that's helpful. So you still do them,
Yeah.
but if there's something major, then you lose your option fee is
well,
what it comes down to.
When you waive your option period, you aren't paying an option fee. And there are ways you can terminate the contract that could also mean you're losing your earnest money. But that's something we can talk through offline if you'd like. However, that is becoming more common, especially in with the competitive nature of our market right now. Some people are just happy to get a home and are waiving their right to terminate. That does not mean, again, you do not have the right to do an inspection. Chris, do you have you noticed any of that with your any inspections you've been doing for people that they don't have an option period?
I've been noticing getting texts at 9:30 saying I need one at 9 o'clock in the morning more often for sure. But as far as waiving them, I haven't, I probably wouldn't be privy to somebody waiving an inspection that I just wouldn't be contacted. But I know the option periods are now 1 day. We've been dealing with that a lot, and 2-3 days are normal. So, but as far as somebody waiving, I don't think I would have the intel on somebody waiving for me.
Yeah, Naomi, out of all the contracts we've closed this year, we've only done that one time for a buyer. So again, I would encourage you to stay, see it through, keep going. I know we had a conversation yesterday, we did, and she's, I think, on her 6th offer. So I would tell you to just keep going. We are successfully getting buyers under contract, and sometimes it is taking, it's taking a few, but we are seeing our clients get houses. Okay, anybody else have a quick question for anyone? We are about to wrap up, and before we do that, while anyone else wants to ask a question, Monica, can you pull up the slide with everybody's contact information? So this will be sent out to all the attendees, and if you've got any specific questions you want to reach out to one of the speakers today, you'll have their email and their phone number. You also can reach Torelli Properties Group, and the next slide will have our contact information.
Denise, can I ask you a question?
Yes, please.
So I know the market's crazy and you realtors are doing the best you can, and y'all are working so many more hours and more time with all these multiple offers. And you've mentioned some of these things today, but over just looking at a year ago or 2 years ago, what are y'all doing with your borrowers to make them more attractive? I get that they could be pre-approved. I think it's great what Joe said, to be all the way through underwriting, meaning they could close really fast. But beyond that piece of it, what are you finding that y'all are having to do to win?
Well, I think, partnering with an experienced agent right now is very important, just like having the right lender partner, the right partners, but you need to have an experienced agent who works full-time and that knows how to maneuver this market, who knows how to write a strong contract for you. There are addendums that we can attach to the contract that can guarantee an appraisal shortfall, and knowing how to definitely write, you don't have an opportunity typically to rewrite an offer. So if you aren't doing it right the first time, then we were putting a buyer in a weak position. So I would say definitely you need to know who you're working with is experienced in this market. And we are doing a lot of things like when we have a conventional buyer and they want to go over a list price, we are guaranteeing that with an appraisal waiver, which I know is scary, but Joe, I know we're about to run out of time, but appraisals are coming in higher than list price in a lot of properties. We now have comps supporting that. So knowing having agents that know the comps and know we aren't putting you in a precarious position, or we're doing our best not to, is important. Right, Joe? You're seeing appraisals come in.
Yeah, so over the last 6 months, everybody's been offering and guaranteeing appraisals, offering over price and over retail, and that's a trailing indicator, right? And so things are starting to close over the last 6 months, and it's actually increasing neighborhoods, and so it's a little easier to get things comped out today than it was just 6 months ago.
Right. And you have to move fast. So you do have to have an agent that doesn't want to put you off till tomorrow or the next day. Sometimes you have to get out right away. It is extremely competitive. So if you need an agent that does that every day, we encourage you to call Torelli Properties Group. We'd love to help you. And I want to thank all their speakers again for taking their time away to talk today. This may become, more of a common thing. I'd love to have you guys back again. And I know we probably missed some questions, but I'll find out what those are and reach back out to you guys. Everybody's going to get a recording and a buyer guide from us that signed up. So thank you again. And we hope you have a great day.
Thank you.
Thanks for joining.
Hi, bye-bye.
Bye.
Thank you. Bye.